Hello everyone, and welcome to this specialist trading presentation of 3 key strategy rules, and they pertain actually to my Elite Forex Trading College. Welcome once again. My name is Stephen Primo, the president and founder of Specialist Trading. And in today's presentation, I'm going to be giving you, as I just stated, 3 of the rules to one of our most consistent strategies for trading the Forex. We're going to be talking about the Elite Forex College, which is only the second time we've had this in the history of specialist trading. We already had one course, I believe, a couple of years ago, and we're presenting it again for the second time because we've had so many people interested in taking this college course. So this promises to be a great presentation. Once again, welcome. If you're not familiar with our website, Specialist Trading is first and foremost an educational company. What we do is we provide all of our members with education, all the things I've accumulated in my 38 years of trading. We want to empower you with all this information so that ultimately you can treat it as if it were a college, so that you can take the knowledge and take it out into the real world to start trading and relying on your own trading decisions. As I stated, I've been trading for 38 years. I know what works and what doesn't work. I've traded through just about every market environment imaginable, so I'm really aware of how to get consistency in your trading. So I want to show you these 3 rules and show you what's offered in our college. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results with this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. And as you are doing that as well, I want to take this moment to invite each and every one of you, if you haven't done so already, to sign up and to follow us on Twitter. There's our handle right there at SPCLSTTRADG. You might want to write that down because we post a lot of great free information on a daily basis. I post anything from daily financial wisdom to actual signals that our members have currently taken. In fact, we posted a great strategy signal the other day in the E-mini S&P because we have signals in all the markets, not just currency pairs, but the E-mini as well as stocks. And that signal roughly made anywhere from 40 to 50 points in just the matter of less than a week. So we fill you in exactly what we're doing, and we tell you all of this information at our handle there on Twitter. So feel free to follow us as well. Now, if you recall, I said that we are first and foremost an educational side. Why is that? Well, I want to first start off by sharing with you what I learned from trading on the floor of the exchange, because that's where I started trading. My career started roughly 38 years ago. I used to work on the floor of the Pacific Stock Exchange. So even though my background is in stocks, everything that I learned can be applied to virtually any market and any time frame and any direction. But what I learned on the trading floor was really how to get your trading back in sync. Because I started out, if you've seen any of my presentations before, I make no secret of it, I started out just like 90% of all traders do, listening to all the information that's supposed to work, all of conventional wisdom, and then applying it and not seeing the results that you're supposed to be getting. You do all this hard work and due diligence and research, and then when you apply it, it'll work a little bit of the time, but the majority of the time it doesn't, and you go into a large drawdown. I know because from firsthand experience, this is the same thing I went through. I had a very difficult time my first couple of years trading, and I thought that I was probably going to have to get into another career because it wasn't working out. Sure, I would have a couple of winning trades, but then I would give it all back. So it's very discouraging. It's very frustrating to trade this way and not being able to understand why you can't succeed. So I was lucky enough to come in touch with some other traders on the floor. These were traders not like myself. These are traders that have been trading for roughly about 40 years already on the floor of the exchange. And these were my mentors. And they basically shared with me the secrets to successful trading. The first thing they taught me was, Steve, they said, successful trading should be non-subjective. That means that there shouldn't be any room for interpretation. 2 people should look at the same chart and come up with the same scenario. But we know this from experience that 2 people will look at the same chart, whatever it is, and say, well, that's a buy setup, and then someone else will say, no, that's a short setup. See, trading shouldn't be subjective like that. We should all come up with the same clear-cut answers, all right? Secondly, they said that trading should be consistent. And what does that mean? Well, we all want to be consistent. But see, we're all searching for this big home run. I mean, how many times have you seen educators or presenters on webinars or in seminars telling you that they have the perfect system, the perfect strategy, it's going to produce thousands of % a year, if not a month, and you're going to be retiring within the next couple of years? all right, because most traders are looking for that big home run so that they don't have to do any work. But trading should be consistent. And what does that mean? It means we're not searching for the home run, even though that may happen from time to time. But what we're really searching for is a 2 steps forward, 1 step back process. We're looking to hit singles, not home runs. Now, as I stated, the home runs will come every once in a while, and I'll show you a couple of examples with those. But we're looking to hit singles, nice little golden nuggets of profits, so that you'll be able to be sustained with this technique over the years. Hitting home runs will not sustain you because you can just as easily give it back. I know this once again from being on the floor. I knew lots of traders who made hundreds of thousands of dollars in a short time and then gave it all back. So there's really no consistency in that type of philosophy. What we're looking for is just to hit singles. That's what you should be searching for, and my mentors taught me that successful trading needs to be consistent. They also said that it should be as simple as possible. How many traders do you know that have virtually every indicator on their screen? They're virtually watching every news event. They're listening to every trading guru to make their trading decisions for them. It's too complicated. As my mentors taught me, it is the simplest thing in the world to overcomplicate your trading. Anyone can do that. It doesn't take a lot of discipline to overcomplicate your trading. But it is the most difficult thing in the world to simplify your trading. So this is what we want to do. I had tons of indicators on my screen. I was just waiting for every news announcement to come out, every economic indicator, every announcement with jobless claims, everything that was going on the other side of the world. And guess what? It still didn't help me make money because my trading was too complicated. For some reason, we're taught that the more complicated a trading plan is, the more successful it will be. But in my 38 years, I've learned that it's actually the opposite. The least complicated, the more simple your plan is, the more you will be on that road to consistency. So this is what we teach also in our course, and this is what my mentors taught me. And then lastly, and I think most importantly, my mentors said that successful trading should make you a part of the process. All right, what does this mean? Well, it means that the majority of traders are relying on an outside source to tell them what to do, to tell them what to buy, to tell them what to sell. This can either be an indicator, it can be someone in a trading room, it can be someone on TV or someone you subscribe to. Regardless of that, everyone puts so much importance on something else telling them what to buy and what to sell. And why do we do that? Because it gives us an out. Because if it doesn't work and we lose money, we can always blame someone or something else. Oh, the indicator doesn't work. The indicator, boy, I did all the right things, but the indicator didn't work. Or I followed this guy in his chat room, and it worked for a little bit, but now he's terrible. It doesn't work. See, it always gives you an out to blame something. But we don't want to take responsibility for our own trades. And this is what you have to do. You have to be a part of the process. This is why we don't teach systems at Specialist Trading. We teach strategies, where strategies are roughly 70% rule-based, but we allot 30% for that so that you can become a part of the process, for you to have some discretion involved or some type of insight. Because you have to be making your own decisions. You have to look at a chart and say, well, okay, there was a buy setup here, but you know what, I'm going to buy here, or I'm going to decide to sell here, or maybe I won't even take the trade. You have to be a part of the process, not someone or some system or some indicator telling you what to do. Okay? So as soon as I really understood these concepts and really, accepted them, that's when my trading started to become consistent. And so this is what we teach all of our students and all of our members, all these same objectives here. Trading should be non-subjective, it should be consistent, it should be as simple as possible, and you should be a part of the process. This is what we teach in all of our courses, especially this is what we go over in the full college program. So, as we stated, even though we give all of our students and all of our members strategies and signals on which to take those strategies, those are more for educational purposes. We're really about teaching you and giving you this information more as a guideline so you can understand how to do it so that ultimately you'll be able to leave and go on your own. Even though once you become a member of Specialist Trading, you're a member for life, we don't want you relying on the signals that we generate or on what we're currently doing or posting on Twitter. We want you to go and do it on your own. We have so many successful traders that have gone out on their own that never traded before or were never successful because they're relying on their own process. So as I stated, even though we give you the strategies and the signals, my goal is not to trade for you the way some other websites do. My goal is to teach you how to trade with the Specialist Edge. This is the same edge that was able to turn my trading around, and this is the same edge we can hope we can instill in all of our members, most especially in our Forex course. Okay, with that said, why don't we first share with you what we're going to cover in our Forex College curriculum, okay? It's 6 weeks of solid education, things that I've accumulated in my 38 years, not only strategies, but a lot of building blocks. As you see here, week 1, we're going to be talking about the foundation and the building blocks of Forex trading. We're going to go over all the basic fundamentals, and when I say fundamentals, I'm not talking about news or economic indicators, things of that nature. We're talking about the fundamentals of trading. These could be patterns. These could be ways to determine the trend. These could be actual chart patterns to be looking for. But we're really going to give you the philosophy in week 1 and the foundation and building blocks of Forex trading. Then in week 2, we'll start in with the strategies. We're going to talk about one of our probably our most consistent pullback strategy that just relies on pullbacks in week 2, and this is Forex Strategy number 1. Okay, a great pullback strategy, and you'll get all the rules and know exactly how to implement it after that week. In week number 3, we will go over strategy number 4, our most consistent strategy to date. The best thing about strategy number 4 is that if you happen to trade another market or if you happen to trade a different time frame, guess what? Strategy number 4 works probably better than any other strategy we've seen in any market and in any time frame. So we're going to go over Forex strategy number 4 in week 3. Now in week 4, we'll talk about a strategy that was especially designed just for the Forex markets. That's strategy number 5. That is our premier strategy for trading the Forex only. Even though it works well in the other markets, it's really designed just for the Forex markets. And guess what? You can also use this in other time frames and other markets as well, but this works the best in the Forex markets. Week 5, we're going to go on to one of our most popular methods and techniques. That's the PET-D. That is a proprietary tool. I'll show you some examples of that later on in today's presentation. But that is a great tool for telling you the short-term trend. Also, within that tool, you can also have different trade setups as well. So I'll share that with you. Now, this is a tool that we have hedge fund managers that are excited about this. We also have institutions that are interested in this. You're going to be getting this completely within the Forex College. And then lastly, week 6, we're going to give you a great technique called Advanced Trade Management. This technique has saved me so much money over my 38-year career because it really is it's designed to help you with your trading and whether you should be trading your strategy or not. Okay, and we're going to put it all together. Any questions or any things you may have made much clear sense during the 6 weeks, you can ask me. You can ask questions during any of this weeks, but anything towards the end there, because that will be our final live class. These are majority of these classes will all be live, and they will all be videotaped as well and recorded so that you can access them whenever you'd like. If you can't happen to make the class, if you're busy that particular week, don't worry, they're all recorded. You can watch them whenever you'd like. Okay, so this is the curriculum, 6 weeks of solid basic information. We have 3 strategies, 3 of our best Forex strategies we're sharing with you. We're also going over the PET-D, and we're going to talk about advanced trade management. These are things that I've never seen anyone else using because I've got these and I received these, the PET-D and advanced trade management, and some of the strategies when I was on the floor. So these are really the secrets of a stock exchange specialist right here that we're sharing with you. Okay, now we're going to go forward and start with a presentation, and I'm going to be sharing with you some of the rules behind, as I stated, one of our most consistent strategies. That's Forex strategy number 4. But before we begin, I know a lot of you may have some questions once I go over the rules or something isn't that clear to you. Don't worry. We will answer any questions that you may have, but please remember that we'll answer the questions at the very end of today's class. So if you have a question, just kindly memorize it and just hold on to it, and then we'll answer it at the end, probably about the next 20 or 30 minutes from now, okay? And we'll reserve the last 15 minutes for any questions you may have. I'll answer probably the most important question you have, because this is asked virtually every presentation I give. Is this being recorded? Yes, it is. So if you have to leave early, or if something is happening mechanically on your end, don't worry, we'll send you the link to this recording. Okay, so let's talk about strategy number 4. In fact, we are going to talk about some of the highlights first. Who is strategy number 4 for? Who's it designed for? Well, it's basically, in its most purest form, it's for traders looking to catch quick momentum moves. In other words, you're not going to be in the Forex market currency pairs that long. You're basically going to be in and out in a matter of days if you'd like. Now, if you're looking at an hourly chart, you'll be in and out in about 4 hours. If you're looking at a 10-minute chart, you'll be in and out in about a half an hour or so. So it's not something that was specifically designed to be in the market that long. However, if you'd like, we show you advanced techniques for staying in the trade as long as you'd like. Many of our traders who trade this in the last Forex college we had like to trade more than a couple of lots, and what they would do is use the standard exit and exit half of their position, and then they use our advanced techniques to trail or to exit at a higher target. So we go over all of that in the course, and I'll show you actually an example of that later on in today's presentation. Now, this strategy is basically for all students. So in other words, we do not care if you just started trading last week or if you've been trading for 50 years. It doesn't matter. Everyone starts out with the same rules. All right, the basis for strategy number 4 that we teach to beginners is the same thing I use on a daily basis, the same thing I use today in my trading. So there's no difference. Don't worry if you've been trading for a limited time, or don't worry if you've been trading for a long time. Experience really doesn't matter here. It only matters in terms of you understanding the process. But everyone is going to get the same foundation. Once you understand the process, then we can fit and mold it to meet your needs. All right. Strategy number 4 is a pattern recognition strategy. So we don't rely on a lot of convoluted indicators or news or things of that nature. We don't look at a higher time frame to tell us what to do in the lower time frame. You see how complicated that's starting to get? Remember, we want to keep things as simple as possible. So we only use one indicator in this, and I'm going to share that with you in just a few moments. Therefore, its intensity level from 1 to 3, if 1 was the most intense and 3 was the least intense, it's right in the middle. Right there at 2. So basically, you can enter an order. You don't have to be glued in front of your computer all day unless you want to. But it's a very simple and very low intense type of strategy to monitor. Remember, our edge here is consistency. I'll show you some examples in just a few moments that really capture these large gains. But that's not what we're looking for. We're not looking for that. We're looking to get consistency in our trading. All right? Every once in a while, we will hit these home runs. But that's not our goal. Our goal is consistency, because what I've learned in my career is that consistency is the only thing that will sustain you. All right? No strategy, no technique, no indicator will sustain you. It's consistency in your trading. And this is what we instill in all of our students. And the way you get to consistency is by keeping things simple, non-subjective, and by making you a part of the process. All right, so let's talk about the indicators. We're going to share with you the rules for strategy number 4. Basically, the strategy has, I believe, 6 rules. We're going to give you half of them. And in my opinion, these are the most important of the 6 rules, but we're going to give you half of them today. And guess what? You can either apply these to your current strategy, and we really feel you'll ramp up your odds for success just by applying these 3 simple rules I'm going to share with you today, or you can build a strategy based off these, okay? But please remember that we're not giving you the full strategy, because it wouldn't be fair to the people that spend hundreds of dollars purchasing strategy number 4, and it wouldn't be fair to the people who join the college and want to get all the detailed information and education concerning strategy number 4. But we're, in good faith, we're sharing half of the rules with you today, all right? Just to show you how simple our strategies are. Therefore, the indicator that we're going to be using in strategy number 4 is basically what we call the buy-sell line. And all that is the 50-period simple moving average. And we've talked about this before, and I'll go into it in a little bit more detail when we go over the rules step by step. But the 50-period simple moving average is simply a tool to tell us what the overall trend is, okay? In other words, if you're looking at the ocean and you see the waves coming in that are breaking on the shore, that's similar to the short-term trend. But the overall trend are the tides way out there in the ocean. Those are the things that really move the ocean and really have all these underlying tides, and that's where the real strength is. So the 50-period moving average gives us that overall trend, okay? All right, so here are the rules to strategy number 4. These are just 3 of the basic rules. We have 3 more concerning exits, concerning stop placements, concerning money management that we won't go into right now. But you're going to get the gist of these rules for strategy number 4. These are for buys. But remember, this strategy works in all time frames. So if we show you an example here on a daily chart, remember that it could just as easily be a 5-minute chart or a weekly chart. And we're just going to reverse these rules we're sharing with you for sell. So whatever you see here, if you wanted to go short, you would just reverse them. And I'm going to show you a lot of examples where it makes a lot more sense. All right, so if we want to go long, we want to see that the closing price must be above the 50-period simple moving average, okay? Now, the ideal scenario is for all of the bars to be above, the price bars to be above the 50-period simple moving average. But all that's required at this point right now is that the closing price must be above the 50-period simple moving average. And if we want to be even more advanced, which we teach in the college, if you're a more advanced trader and willing to take more risk, all you need to do is enter above the 50. But that's a little bit down the way a little bit. But the closing price must at least be above the 50-period simple moving average, okay? If a price closes below, we're not interested in looking for a long setup. We want to look to buy when a price bar closes in the top 25% of its range. We're going to call this the setup bar, okay? I've talked about this before, and a lot of students have difficulty with this because they say, well, Steve, I don't understand. Are you talking about the top range of the candle or of the wick? It does not matter what type of price bar we're looking at. I'm going to show you an example of how this works. But remember, when we say range, range always refers to the extreme high of the bar and the extreme low of the bar. I don't know why we got this concept where range is open and close. That's just the range of a candlestick. But when you're looking at overall range, range is the very high of the bar and the very low of the bar. That's what the range is, all right? So if we see a bar that closes in the top 25, the top quarter of that range, well, that's going to be labeled the setup bar. But we haven't entered yet. So how do we enter? Well, we're going to enter when price trades 1 to 3 pips above that setup bar's high, okay? Why? Because we want to see it trade above. It does not have to close there. All that is required is that intra-bar, it trades there. All right? Once again, I'm going to show you examples of this so it'll make more sense. But please remember, it must trade on the next bar, whether it's a daily bar, weekly, 5-minute bar, but we must trade 1 to 3 pips above the setup bar on the next bar because we're looking to catch momentum. This is a momentum-based strategy. If we do not trade there on the next bar, most likely the momentum has left and it's dissipated, so we'll move on and look for another setup. Okay? So, I know you all have questions, and some of this made sense and some of it didn't. Let's take it step by step. Remember, if you do have questions, just kindly wait and hold off to the very end, and I promise we'll get to each and every one of them. Let's take it step by step. It'll make a lot more sense when we see the examples on the chart. All right, step number 1. Price must close above the 50-period simple moving average. Remember, it does not matter if we're looking at a daily bar, a weekly bar, or a 5-minute bar. These same rules will apply. So if we look at this generic chart here, we see here's the 50-period simple moving average. We see that price is coming down. We even close either right on it or just a little below it. But the majority of pricing is closing above the 50-period moving average. Okay? So this is what we want to look for. Step number 2, we're going to look to buy when a price bar closes in the top 25% of its range, in the top quarter of its range. If we see a bar that closes in the top quarter of its range, this is labeled the setup bar. All right, so if we look here, we see that this bar right here, the very last bar, closed at the very top of its range. Now, a lot of people, once again, have difficulty with this concept. Remember, range is defined as the very top minus the very bottom. Okay, this is the range. It doesn't matter. We're not concerned with where the opening was, where the close was. Range is the extreme high and extreme low. And so the way you find out what the top 25% is, you simply take this bar and divide it by 4 separate but equal parts. Okay, right here. So we've simply, whatever it is, just divide it by 4 and you'll have 4 separate but equal parts. Okay. Number 1 would be the bottom 25%. This would be the next 25, the next 25, and the very top percentage, the very top quarter would be the top 25%. So we want to close within that box, within that range, anywhere from the very top to this line right here. We want to see us closing. And why do we want to see us closing there? Because the market itself, the price bar, is giving us a clue that most likely we're going to continue in that direction. Remember, we don't rely on outside sources to tell us what to do. That's where most traders fail. Upwards of 80% of all traders fail because they're going to some chat room and listening to someone tell them what to do, or listening to news and saying, well, it was good news, I guess I'm supposed to buy. That's why most traders fail. You should be only listening to one thing, and that's the market or the chart in front of you. So if you look at a bar that closes in its top quarter of its range, most likely the odds are in your favor that it's going to continue in that direction. And that's labeled our setup bar, okay? Now, step 3, we're going to enter when price trades 1 to 3 pips above the setup bar's high, the bar we just defined as the setup bar. You notice I didn't say we're going to enter when price closes above the high of the setup bar. We don't care where it closes. Many times it'll trade 1 to 3 pips higher, you'll buy it, and then it'll close lower. That's okay. And in fact, I think it even does this in the next example. But it must trade 1 to 3 pips above the setup bar's high on the next bar. If it does not trade there on the next bar, then the setup is entirely negated. Then we look for another setup. So as we see here, this is the setup bar. It needs to trade roughly around this green horizontal line in order for us to enter, and it does. It trades there intra-bar, and as you can see, it never closed there. It actually closed lower. That's okay. There's still momentum in this trade. So we entered roughly here, and then look what happened. In the next roughly 3 to 5 days, we had a nice gain. This is the way the concept works, okay? It's very simple. It's very basic. I've only given you half of the rules. There are still some other things in terms of pattern recognition, in terms of stop and exit targets that are very important that we just can't give away the entire secrets. You know, this is what we go into detail in the course. But the basic concept still applies, and this is what we apply. Now, let's look at some recent strategy number 4 trade examples that have all of these 3 elements involved in the setup. This is a chart of the Swiss franc before the market really fell out of bed the last week. But as we see here, for all intents and purposes, the majority of the price bars are above the 50-period moving average. We have one bar that closed below, but the next bar closed right back above. And guess what? That very next bar that closed back above, as you see here, this large bar right here, is our setup bar. Why? Because it closed in the top 25% of its range. And here's one thing that's also included in the college course. We also provide add-ons so that you will automatically have a buy signal generated. As you see here, a little arrow that is generated on your screen, or a dot or a line telling you that that is a valid setup bar. Now, remember, this is an educational course. I've been trading this method for over 30 years. I can spot a setup bar just by looking at a chart for 2 seconds. I don't need these add-ons, and I want you as my students to ultimately get there. But for educational purposes, while you're starting, that's why we provide these little setup arrows or setup lines so that you'll be able to see when a valid setup has occurred for educational purposes. Ultimately, and eventually, you won't have to rely on these. You'll be able to spot them for yourself. But the add-on generated, once again, you will be receiving this add-on. It generated a buy setup, so you know that this is a valid setup. You can check your homework and see that it's a valid buy setup. So you would have simply bought on the 18th to go along the Swiss franc. And look at the nice move you had to the upside. Now, as we stated, strategy number 4 is designed for quick momentum moves. You could have gotten out very quickly in the next week or so and probably made a good 100, 150 pips using the standard form of exiting. But if you wanted to use our more advanced techniques, which we teach you in the course, well, guess what? You would have exited right here. This was the most extreme place to exit, and this was well before the Swiss franc fell out of bed this past week. So this is the beauty of the techniques we share with you. We teach our students advanced exit, advanced entry, advanced stop placement, all within the course so that you can ultimately pick and choose and decide what you want to best suit your way of trading strategy number 4. Remember, we stated this is what becoming a part of the process is. 70% rule-based, where you follow the same structure, but 30% allotted for discretion. How about the British pound? Well, obviously, price is below, right? We're below the 50-period moving average, so this means we're only looking for short setups. We're not going to buy anything if price is below the 50. So looking back here from the beginning of December all the way into the first week of January, just this past week, the British pound has been well below the 50 period. So there's no reason in the world to try and look for a buy setup. We're not going to even consider going long the British pound. The first thing we're going to look for is a strategy number 4 setup. And the add-on, once again, just as an educational tool, produced 3 setups right here. 3 red arrows telling you these are valid strategy number 4 setup bars. They all closed in the bottom 25% of their range. This does not mean you can simply sell at the market. If you're a more advanced trader, sure, you could use that technique if you wanted to, and if you had a large enough account size. But if you're using the standard entry technique, you would have entered on the next bar, and you see you had 3 nice sell signals using strategy number 4, one at the end of November, one in the middle of December, and then just one about a week or so ago on the 5th to go short. Now, as you see here, this is a weekly chart of the Canadian dollar. As it states, an advantage of strategy number 4 is that it can be applied to virtually any time frame. Now, we don't have the 50 period plotted here. It didn't fit on the screen, but trust me, price is above the 50 period moving average on this weekly chart in the Canadian dollar. And the add-on generated a buy setup, but you would have spotted this on your own after enough training and after enough paper trading, being able to spot setup bars according to the strategy. So all you do is enter to buy on the next bar. It traded above, so that's your buy there, roughly about 1.0800, and then look what happened. This was in mid-July of last year. You could have held this position as long as you wanted to, but most likely you would have gotten out with at least, if you're following the basic format of this, with at least 300 or 400 pips. You could have taken maybe a good 600 or 800 if you wanted to. Now, this is a weekly chart. How about a tick chart? Here's the euro dollar going back to last week, from the 5th all the way up until the 8th, which was last Thursday, a week ago, just roughly. Now, as you see here, we are below the 50 period moving average. Here is a great example of what we say, where price can close above, but once price closed below, and your entry would be below, as we see here on the entry, this is still a valid setup to go short. Now, this is, having said that, a more advanced way of going short. We would want our beginners more to take setups such as these, where you're completely below the 50 period. But this is a more advanced way to take the trade, and you could take this if you wanted to. This is a tick chart just from last week, with 3 nice sell signals you would have gotten using strategy number 4. And trust me, our members who have already taken our Forex Elite College course were privy to taking these signals, so they most likely would have taken them themselves. So let me just state that these strategies are great with the currency pairs. As you've just seen, they work in all time frames and all directions. But we realize that not everyone is solely a Forex trader. You like to transfer into other markets as well. So they also work with stocks, ETFs, futures, and even commodities. So that's the beauty of all these strategies we're giving you in the college. You can also apply them to all of these different markets. In fact, we all know how terrible crude oil has been lately. It started to bounce a little bit, but coming into the bounce we've had, look at strategy number 4 on a continuous chart of crude oil. All right, this is going all the way back to October, where price started to significantly be below the 50 period moving average. Once again, this simple rule right here of using the 50 period moving average gives you all the consistency you need. Why? Because you're in sync with the market. If price is below, this means we're only looking to go short. And just with this strategy alone, you could have had 3 very nice signals to go short from October all the way till the end of November, and you could have stayed short if you wanted to, trading strategy number 4 and crude oil. So this is a great example of how well this technique can transfer over onto any market in any direction. Now, 2 extra bonuses. We're not just giving you the foundations and the building blocks, the philosophy, and we're not just throwing 3 strategies at you. We're also giving you 2 great techniques that I learned from the floor. The first one is the ATM. That's our Advanced Trade Management program. It's a great technique that has virtually saved me hundreds of thousands of dollars with its money management techniques. And the next one is our most popular method to date. It's the PET-D. All right? Let me go into detail exactly what these are. ATM stands for Advanced Trade Management, as we said. It's probably one of the best money management techniques I know of, because it's designed to keep you out of drawdowns. Now, here's an example with some of the setups that occurred a couple of years ago in our first Forex College with some of our trades. When these signals were applied to the euro dollar, look how great they worked. I mean, every sell signal worked great, and every buy signal worked great. And this is what you strive for. Remember, we're not looking for home runs. We're just looking for consistency. And it just means that when you get scenarios and environments such as this, it just means that your strategy or whatever technique you're trading is in perfect sync with the market environment. And this is what we all live for, once again, because everything seems to be working in place. Now, unfortunately, later on, we see that this can happen. These were all actual signals trading the euro dollar, and that were generated by some of our strategies. Unfortunately, they were all losers. So we're not going to sit here and tell you that everything wins all of the time. Here's the beauty of advanced trade management. Once you know how to apply this simple formula, this simple method, it would have kept you out of the majority of all of these losing trades. So it's a great, great technique that was introduced to me on the floor that I've been using for over 30 years. We're going to share that with you and give you the secret of that as well. And this was, the Advanced Trade Management is only available to course members. We don't share it with other people that purchase individual strategies. We only make it available to course members at this time. And then the PET-D, which stands for the Primo Early Trend Detector, another tool that was introduced to me on the floor of the exchange some 30 years ago. The only trouble was when I first was introduced to it, it was a calculation that had to be put together by hand because we didn't have high-speed computers or programmers then. So we could only apply this for daily bars because it would have been too difficult to apply for every 5 minutes. The minute you probably figured it out, you'd have to get ready to discern what the next bar was going to be, because the PET-D is the short-term trend identifier, whereas the 50-period moving average technique tells you what the overall trend is. The PET-D will help you with the shorter-term trend. So let me show you how we apply it. It's a proprietary color bar algorithm. Sorry, this tool is too valuable. We have hedge funds that are interested in even purchasing this, so this tool is too valuable to tell you exactly what goes into to calculating it. All we can share with you is that it is based off of momentum, and it's extremely simple to use. It is probably our most popular technique and method purchased so far at Specialist Trading because it helps people so much with the short-term trend. So what we've done is devise it with the help of our programmers into a color bar algorithm. And what this algorithm does is it paints the bars green when you're in an uptrend. And a series of red bars are painted red, showing you that you're in a downtrend. So if we look here at this chart of the Canadian dollar, and this is a daily chart now, you'll see now that all the way up the bars are colored green using the PET-D. So the beauty of the PET-D, as you see here, is that it tells you which direction you should be trading. All right? Once you know that, you don't have to just apply any of our strategies, even though we are very confident with the consistency of our strategies. But if you have something else that you feel confident with as well, you can also apply it that way. You can apply virtually any strategy or technique to that direction. So you see, even though the Canadian dollar was going up for a while, there were times when it went sideways, and I'm sure a lot of people would have thought, well, maybe we're topping out here. As long as the PET-D is colored green, it's telling you that the trend, the short-term trend, is still up. So you could have purchased on these lows or look for some type of breakout patterns. And it works conversely when something is going down. Here's an older chart of the euro dollar. The euro dollar was going straight down. I'm sure a lot of people would have thought, well, maybe we're bottoming out here. We're making a double bottom. But as long as the bars are red, you are only looking at things from the short-term downward side. Okay? Now you can also apply this to indexes or to stocks or to futures, whatever you'd like. Here's a monthly chart of the S&P index, the S&P 500 index, okay, going back 20 years. And we see all the peaks and valleys that were produced on the monthly chart. And how could this PET-D have helped you knowing when to be in the market for long term and when to be out? As you see here, we had a really nice top formed in 2000. If you all remember 2000 when the bubble burst in the dot-com bubble, and the market went straight down to to 2003 or 4. Then we started to go back up again. And guess what? The housing and financial crisis bubble burst again, and we went straight down. But since then, we've been going straight up. Now, most people do the opposite. They decide to buy when things are going great, and then when they can't take it anymore, this is when they sell. And that's the way most beginning or not sophisticated traders trade. What if you had a tool that could keep you on the right side? Well, if we simply applied the PET-D, we see here that the majority of bars are green. That means we should be in the market. When the majority of bars are red, we should either be on the sidelines or short. So this is a monthly chart of the S&P 500, and you see how well it could have helped you in your long-term portfolio. So let's go over the Forex College curriculum one more time. Remember, 6 weeks of solid information, things that I've accumulated in my 38-year career of trading. Remember, we're going to start week 1 off with the foundation and the building blocks of Forex trading. All the philosophy, all the basics you need to know, and we'll really focus on that because you'll be able to see that all the things you have been focusing on have no consistency, and you can just literally get rid of them. You don't have to worry about them anymore, and you'll feel much lighter, and you'll know that the basic building blocks are the only things you have to focus on. Once we understand these concepts, we'll go into week number 2. That's where our live class will talk about Forex strategy number 1, our most consistent pullback strategy. That's where we're looking to buy sell-offs in an uptrend. And that's a great strategy for purchasing sell-offs in an uptrend. You can also short rallies in a downtrend, and that's what's great with this technique. Now, week 3, we'll go over into Forex Strategy number 4. Our live class will go into detail. We'll share with you the rest of the rules to the strategy I just shared with you today. Okay, well, you've already got 3 of the rules. We're going to give you 3 more. And then in week 4, our live class will cover strategy number 5. Once again, this is built solely for the Forex markets. Even though it works well in other markets, we've seen it works the best in the Forex currency pairs. It's shown the best consistency in terms of just Forex market trading alone. So you'll get all the rules and how to trade strategy number 5. In week 5, we share with you how to trade the PET D, how to trade with the PET D, how to use it as a confirmation tool, how to use it with different setups that occur within an all-green bias or an all-red bias. So there are 4 separate entry techniques included in the PET D. These are not strategies, they're just entry techniques that you can use in your own trading. Lastly, the last live class, week 6, we'll talk about advanced trade management, that very simple formula that will help to keep you out of major drawdowns when the strategy is just out of sync with the current market. We've all been trading through the summer months, and we've seen when the currency pairs just go in a range sideways. Well, ATM, Advanced Trade Management, can help alleviate that pain and keep you out of that for the majority of the time. And then we'll put it all together with your final live questions that you want to talk to me and discuss, and we'll put it all together so that you'll be able to ultimately be trading any of these strategies and techniques on your own, and you'll basically just be left to go and trade the markets. Now, I also want to state that as a learning tool, we will be emailing you signals. All right, this is a current signal or a recent signal that was mailed the last day of last year of December. This was in the Canadian dollar, as you see. This is what you will be receiving as a college member. As you see here, we told you to go long the USD CAD, the dollar Canadian dollar currency pair, if it trades at 16.19 or higher. We can't share with you the stop placement or the exit because it wouldn't be fair to those people, but this was a standard strategy number 4 trade, and as we see, if we look at the chart, we are well above the 50-period moving average, so this is telling us that we're only looking for a buy setup, and here was our buy setup right here. This is when you would have known this day to enter into the market once we traded 1 to 3 pips above it on the next day. So as you see, the very next day, which was, I believe, the second or the first trading day of January 2015, that was your entry. And look what happened after that, okay? So this was a signal that all of our course members already were able to receive, and all of the college members were already privy to because they've all learned how to spot strategy number 4 setups already. This was only not even a couple of weeks old, so this is a strategy that you could have taken advantage of. It's too bad we didn't give you this webinar a couple of weeks ago because you could have taken advantage of this recent signal. And I just want to share with you some of the testimonials we get from people who have loved our products. Remember, a lot of people are always worried, or they say, boy, Steve, I've purchased so many programs in the past, and I'm kind of very nervous about doing things because so many people promised the world, and then when I started trading it, they didn't deliver. And I totally understand. Remember, I struggled for years trying to trade, and I did the same thing. I would purchase systems, or I would purchase the perfect technique, and then I'd spend hundreds, if not thousands of dollars, and then when I tried it, it wouldn't work. Why? Because you're relying on something to tell you what to do. In our course, or in our college, what we're doing is giving you sound education so that you can put it together and make your own decisions. In fact, let me share with you what someone in our last college emailed us. This was a testimonial. He says, "Hi, Stephen. At 77 years young, I have been day trading Forex for some time. I was hanging in there with good money management, but not really making money. Since discovering you, the 50-period moving average, and using strategy number 4 since September 19, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. I missed a few. I only have to review the charts twice a day, which allow more trades and at a lower risk than daily. Plus, I get to golf and read more. What can I say but thank you. Thank you for the education. Looking great for the future." So as you see here, this was a previous course member. We're really providing you with education. Not everyone is going to trade every strategy the exact same way. Someone may want to squeeze as much profit as possible using the techniques we teach. Someone may want to get in and out. Either way, what we're trying to instill in all of our members is a sense of consistency. All right, that's what we're looking for, and I'm sure that's what's been lacking in your currency pair trading. So let's recap. What are we going to offer you? Here's what you'll receive once you become a member of my Elite Forex Trading College. 6 full weeks of trading tools and techniques. All right, this includes 3 proprietary Forex strategies, exact stop placements, exit, and profit targets. It's not something where we leave it up to you. We're going to share with you exactly where to place your stop, where to exit, and where to use the standard profit targets. Once we get into the more advanced portion of the course, then you can decide and pick and choose which ones you want to use for your own personal trading. We give you educational signal service. Remember, we share with you what you'll be receiving in an email. You'll be receiving those signals as a service, as an educational service, so that you can understand how a setup is devised and what it means to be generated properly. We share with you both conservative and aggressive versions so that you can trade and choose which one. And remember, the bonuses, we give you 2 great techniques that I learned on the floor, the ATM Advanced Trade Management and the PET-D tool. That's the Primo Early Trend Detector. These are great, great tools as bonuses that can help you get that higher level of consistency. Remember, this is just not something where we're throwing this information to you and saying, good luck, let us know how it works. You're really going through a mentorship with me. These are live classes. The majority of these classes are live. I believe 1 is on video, but 5 of them are all live classes. And you get my 38 years of trading experience. That's what you're really receiving. I think out of the cost of this, you're really paying for a private mentoring with 38-year veteran of trading the markets. So remember, in closing, I just want to share with you, this is what my mentors taught me, and this is what I teach all of my students, and what we will be going over, especially in the course. Trading should be non-subjective. 2 people should not look at the same chart and come up with entirely different ideas of what to do. You should both see that you're either going to be going long or you're either going to be both going short, but not the opposite. Trading should be consistent. We showed you some home runs we had here in the last a couple of recent examples, but that's not what we're looking for. We're looking for consistency, which is the small golden nuggets of trades. All right. We also should have our trading as simple as possible. You saw the 3 rules I shared with you. They're extremely simple. They may be a little bit difficult to grasp in the first day if you've never seen me talk about them before, but they're extremely simple. After a couple of days, you'll be able to spot these setups like the back of your hand. And then lastly, trading should make you a part of the process. We never want to rely on an outside source to tell us what to do. As I stated, we give you the signal setup. We email you when a setup has been generated, but that's for educational purposes. We don't want you to rely on that. What we want to do is have you check your work and to see if a signal was generated through the email or through the alerts we furnish you with, so that ultimately you can just decide on your own. That's a valid setup. I don't need these signal setups anymore. I don't need the alerts. I know when a valid setup is. And then that means you're ultimately free. You finally graduated. So this is what we are teaching you in the course, the same way these things were taught to me on the floor. So this is our entire package, the Elite Forex Trading College. And remember, you get instant access. Once you sign up, you will get instant access to the course. Now, this course, when we did the first of this series, remember this is only the second time we did this. We advertised this for $39.95. Okay. Now, because of the attendees today, we are discounting this price. We're discounting it roughly 12% down to $34.95. Okay. For all the courses, for all the different strategies you get, for all the information provided, this is really a great price for this. Now, one of the best things about this, we realize that some of the traders can't make this, this one lump sum. We also have payment plans. So you can contact any one of the trading consultants and they can put together some type of a trading plan for you so that you can be up and running as early as today. So this is all part of having you get involved with our Forex Trading College. And remember, this includes 1 year of trade signals. All right, so you're going to be receiving these trade signals, these alerts, such as the email alert I just shared with you, for a year. But this is for a limited time only at this price. This is our early bird special price. So as we go forward here, here's how to contact us, and here's how to possibly talk to one of the trading consultants to put together some type of payment plan for you if you need be. But remember, our sister site is Pro Trader Strategies. They market and promote all of my individual courses. So if you'd like to speak to anyone, you can email them at trading@protraderstrategies.com or speak to them directly at area code 310-598-6677. If you're interested in joining right away and getting immediate online access, there's the link right below at the very bottom. As you see there, you have to cut and paste that onto your browser. But if you look onto the chat box to your right, you'll see that they have furnished you with that link, and you can, if you want, you can simply click that on and we'll take you right to the sign up page, so you can be up and running very quickly. Okay, remember, this is 6 weeks of solid information taught by me. I'm going to be your individual course instructor, and you're going to be getting 38 years of experience for strategies that have shown tremendous consistency. All right, I want to thank you for holding off on any questions, and I'm going to open up the question and answer box now. If you happen to have any questions, now is the time to ask. Let me see if I can get Mahmoud asks, so where is the stop will be in this case? Well, Mahmoud, remember, we can't share with you the stop because that's in the course. That wouldn't be fair to the people that spent hundreds of dollars or roughly $4,000 purchasing the college course last time. So we gave you 3 rules. We can't give you everything. It's almost like saying if you went out to dinner, you can't say, well, where is the final course? I mean, don't I get the meal for free? We've given you a great appetizer, but it's up to you to get involved with our course, in other words, to get all the information, okay? John says, under what conditions do you exit these trades? Once again, John, we have different exits that we teach in the course. We can't give you that information now, or else you just have a free strategy, one of our best strategies and most consistent strategies for free. Once again, I don't think any of us go into a restaurant and expect to be getting a meal for free. What we've done is given you a portion of that just so that you understand the process and can see in good faith how simple our strategies are. Our exits, as well as our entries, as well as our stop placements, are all in a standard format, but we also give you advanced exits, entries, and stop placement so that you can pick and choose to become a part of the process. Some traders like to use our standard exit for all the trades. Other traders are more aggressive, and they said, you know, Steve, I'm going to use the more aggressive exit point. I'm going to try and squeeze as much profit as possible. So it's up to you, but this is what we teach you as my student in the courses, okay? Let me see here. Carl says, this is a pullback strategy, but can you apply the 25% rule entry on any bar, whether in the pullback area or in the main uptrend? Well, without giving away, once again, all the rules, strategy number 4 is a consolidation / pullback strategy. And what we're looking for is a specific pattern that goes back a number of bars, roughly about 10 bars. And this is what we teach you in the course. Remember, I stated strategy number 4 is a pattern recognition strategy. Now, what I shared with you today were some examples that were very similar to pullbacks, but you'll see sometimes strategy number 4 setups in a consolidation type of ranging or patterns. So it's kind of a pullback or a hybrid pullback strategy. But it's also a pattern recognition that we're looking for, also a specific money management that we're looking for in order to take a signal. So this is all taught in the course. The main thing I think you have to understand is that price and entry have to be above the 50-period moving average. All right, that is extremely important. Why? Because it means you're in sync with the market. That's how you're going to get on that road to consistency. If there's one thing you take from today's presentation, that should be it. If price and entry is above the 50-period moving average, then that's great. You're in sync with the overall trend. But if you're entering below the moving average, most likely you have a recipe for disaster. It may work every once in a while, but over time you will not see the type of results you're looking for. So that's one thing that we incorporate in many of our techniques. Now, the PET-D is a great short-term trend identifier that will get you in sync with the short-term trend. So we're giving you a lot of great weapons to attack the markets with. Patrick says, this was really an excellent webinar. Do you a direct email address? Not sure, Patrick, do I need a direct email address, or do I have a direct email address, but that's reserved for my students if you're asking about me. But if you are interested, yeah, I contact the people at Pro Trader Strategies if you're interested in conversing with them, or you can call them directly. But I'm not really sure I understand the question. But I thank you very much for your interest in our college. Rodney asks, does this work on binary options? You know, it's funny, Rodney, we have more and more people trading our techniques and methods with binary options. Now, I have to say, I do not trade them. Okay, I personally do not trade them, but I think from the feedback I've gotten from the more and more traders that are students of mine, that are members of Specialist Trading, that you can apply these very simply and they have a very good effect. But I can't really give you any personal feedback since I don't trade them myself. So I'm sorry about that. But from what I have been told through members, they've had considerable consistency and success in trading binary options with the PET D, with strategy number 4, and any other of our techniques. So that in itself could be your answer right there. Okay. Let's see. Mahmoud says, could we make 1,000 pips daily by following this course? Well, Mahmoud, I would never tell anyone how much they can make because it's up to you. Remember, if I tell you what you can make a day, that's basically you're taking yourself out of the game. It's up to you to decide what you want to make a day. Okay. Remember, we do not want to rely, and we do not want to take our signals from someone or something else. We want to be the process. So how much you make is up to you, and how much you lose is up to you. And because I'm not going to tell you that every trade's a winner. We're giving you all this solid information and things that have stood the test of time to put together a great recipe for success, but it's up to you on how you want to construct it. We give you the foundation, and I work with you single-handedly as your mentor to get you that success. If you want to use the standard foundation, well, you know, you see the signals that I currently showed you there. Those are signals that happened last week. Okay. If you want to, you know, use a more advanced technique, you can use those, and you can make more money, or it's up to you. So by asking, you know, you should. It's my opinion, my philosophy. You should never look for how much you can make a day. You know, because that right off the bat is a you know, a defeatist mentality. We're not looking for that. We're looking for consistency. Okay. I hope that explains, you know, your question. Let me get to some more questions here. Let's see. I have to scroll down. I'm sorry, I'm missing a few, and I don't want to miss over anyone. Mike asks, hi, Mr. Primo, I came in late. Are these courses provided through DVD? Actually, Mike, they're live courses, but they're all recorded. So in other words, you can attend the courses live and be there with me and ask questions and converse with me over the internet. Or if you're unable to, every course we have is recorded. In other words, the live course is recorded. So we're not going to give you an old course that's been recorded years ago. It's the course that we're actually giving in front of our students when we actually do present the college. It's all being recorded so that you can access them whenever you like. So they're usually available later on that afternoon. So if we recorded it, let's say that day at 12 noon, and you come home from work, you'll be able to access it that night and be able to watch the recording of the new strategy or new technique we're learning. But we don't ship you out any DVDs or anything. Everything is online, okay? Harry says, the audio cut out while you were describing the educational signal service. Can you tell me about it? What kind of alerts? Okay, Harry. Well, whenever a signal is generated off of a daily bar, okay, as we showed you that one in the Canadian dollar, when a signal setup is generated, we will issue you an email alert. As well, we will post it on the website. So if you're not available to get email, or you can simply go to the website and it will tell you when a signal has been generated. Okay, so that will happen that day. Now this is only for daily bars because we realize strategy number 4, strategy number 5, strategy number 1, they work in all markets and all time frames. So we can't be automatically generating, you know, every signal on a tick bar, every signal on a 5-minute chart, every signal on an hourly chart. There would be just hundreds of them. There's just too many. So what we're doing is educational purposes. We are providing you with signals as they occur. Now sometimes we'll go into these stretches where you'll be getting tons of signals every day. And then you might go into a 2-week period where not one signal is generated. That's okay, because that's the way we trade. We don't want to force anything. We want to jump on board whatever the market is telling us. Remember, we're only listening to one thing, and that's the market. If the market is telling us that it's not going to go in any direction, well, then we're not going to trade. If the market is telling us that it's generating tons and tons of strategy number 4 and 5 and number 1 setups, well, then we're going to take them. So whenever a setup is generated on any one of these strategies on a daily bar, you will be issued an alert either through email or on the website, okay? But remember, these are for educational purposes. They're not so that you can simply say, well, I really don't understand what I'm doing. I'm just going to blindly take this setup. Because if you do that, I can almost guarantee you'll lose money, even if it's a winning trade, because you won't understand the process. You won't, be entering the orders correctly. You won't really understand why or where you should be placing your stop or your exit, and then you'll most likely fail. So they're educational tools. Ultimately and eventually, you should be able to decide these and spot these on your own. Okay. Once again, Mike asked, do you have to attend classes physically? No, it's all done over the internet. It's just over a presentation, just like what you're seeing today. Okay. Let's see here. John is asking, do you exit a trade if the close price drops below the 50 moving average? Hi, John. Well, once again, we cannot give away the rules. But this is something that we talk about in the course that is discretionary. It's up to you. You can either, use the standard stop losses, or you can wait. Now, I personally, if I'm in a trade and it drops below the 50-period moving average, that's not reason enough for me to exit the trade, because I showed you a couple of examples where price will go below the 50-period for a couple of days and then bounce back up immediately. So that's not enough reason for me to exit. But it's better to learn the rules first than to try and second guess things and decide where you should be getting in or out. Okay, we provide all this information in the Forex College course. Okay. Let's see. Sai's asking, any brokers firm that you suggest or any clients to choose from? As you see there, Sai, we're just an educational company. We're not affiliated, or we don't recommend any brokers. You just kind of have to go on your own there. We don't want to really get involved in that, because we're just about providing our students and members with sound education. Okay. Let's see. Sai is also asking, is your course lasting for a few hours a day, every day? No, this is a 6-week course. Now, the classes can last anywhere from an hour to 2 hours, but on average, they're roughly about an hour and a half. It all depends on how well you're getting the information. I spend as much time as needed. Sometimes I've given courses where they're 2-3 hours long. Other times will be done in just an hour. So it just happens, how many students we have in the course. We roughly average anywhere from 20 to 50. And if there are a lot of questions, we may be in there for a good 2-3 hours. If everyone pretty much understands and has done their homework, you will be given homework assignments, by the way, because this is the only way I know how to monitor your success. And so you will be given homework assignments, and if everyone understands the homework and they understand the process, then we can move on to the next slide, to the next information. So it all depends, but we'll give these courses once a week, probably starting next month in February. We'll give them once a week. We'll determine what time and what day so that everyone can attend, or the majority of members can attend, and then it will all be recorded. So if you can't attend on a certain day, you can just access the video. Okay? Patrick asks, what is the best time frame for scalping intraday on the Forex? I'll give you my standard answer to that, Patrick. The best time frame for scalping the Forex is the one that makes you feel the most comfortable, okay? The one where you feel the most comfortable. We have people who swear by trading the Forex markets only on a 4-hour time frame. That's the best time frame to trade. We have others who swear only using it for a 5-minute time frame, for 5-minute bars. So what is right and what is wrong? Which is the best one? The best one is the one that works best for you and makes you feel most comfortable. Okay? So what we tell our students is once they learn the process, the rules, well, then they have to go and experiment with different time frames and find what works best for them. Remember, if I said the best time frame is a 10-minute chart, okay, well, what would that be? Once again, you would be relying on what I trade or what I do. Our philosophy at Specialist Trading is never to take your lead from what someone else does. That's a recipe for disaster. Now, we teach you and we show you different directions, and we're there with you every step of the way. We're not just telling you good luck. We're there mentoring and teaching you, but ultimately you've got to make the decision. We can't make the decision for you, and we wouldn't. We wouldn't tell you you've got to trade this time frame, because everyone has a different. Everyone is different. If one thing I've learned in my 38 years of trading is that no two traders trade alike. So it's folly for me to try and have a strategy that says that everyone has to trade it the same way. That's, as I stated, it's a recipe for disaster. It's a recipe for failure. So that's why we're an educational company. We don't proclaim to be a systematic or a signal generating company. We are an educational company where we give you the information and the education so that you can ultimately empower yourself. Okay? Rajiv asks, hi Steve, if we apply PET D, do we have to refer on the 50-period simple moving average to take the trade? That's a great question, Rajiv. What he's saying is that, where the 50-period moving average tells us the overall trend, the PET D gives us the short-term trend. Now, what most traders like to do is they like to have the two trends in sync. So in other words, if you are above the 50-period moving average, the overall trend is up. Therefore, you only want to take trades where the PET D is green. Now, that's a more conservative, basic way to trade it. But we have a number of traders who say, you know what, since the PET D is so valid and so consistent, I'll only trade whatever that color is. So, once again, this goes back to the principle of whatever makes you feel the most comfortable, because no two traders trade alike. Now, in some instances, I only trade with the PET D using certain techniques. I don't care what the 50-period moving average is doing because the PET D is valid enough for that particular technique. In other strategies, especially if I'm looking at daily bars, I use the 50-period along with the PET D. So this is all what comes in the training and in the course. It's all what makes you feel comfortable. But either way is fine, as long as it fits your style. Okay? Let's see. John asks, are all your free webinars accessible from your website? No, John. They are, we pretty much do these, and then the Pro Trader Strategies will give you the links to watch them if you request them. But you'd have to talk to Pro Trader Strategies because each of these free webinars is recorded, and for the attendees, if they can't make them, they will have to request a link so they can see the recording. Okay. Let's see. Ronnie asks, when a signal is generated, how long do we have to get into the trade? That's a good question, Rodney. Well, using the technique we shared with you today, well, if you're looking at a daily bar and the setup is generated, well, you have just one day to get into that trade. All right. We do not want to sit around for a week or two waiting to see if we're going to get filled or not if price trades above there. If we're waiting for a week or two, most likely there's no momentum. So we want to see that we've captured momentum. So most of the time, you're in the next day. If you're not in the next day, well, then the trade is negated anyway. Now, if you're trading intra-bar, let's say you're looking at an hourly chart, well, you're going to know within the next hour if you're filled or not. Because if it doesn't trade above or below the previous bar's high or low, well, then the trade is negated once again, and you're not in. We're negating the setup. Same thing with the 5-minute time frame. But these are not the type of strategies where you're going to be waiting around days or weeks or hours to see if you're in. You're going to know on the next bar usually whether you've entered or not. Okay, those are our standard placements for entry. Now, we also have some advanced placements which we teach you, but they're a little bit more subjective, so I can't really tell you how many days. Sometimes these advanced techniques will have you waiting 3 or 4 days before you enter, and sometimes you'll be entering that same day, the signal is generated. Okay, so these are things we go into the course, but with the standard technique will have you in that next day. Okay, these are all very good questions. Let's see. Mike says, thank you. You are more than welcome, Mike. Ellen asks, if you look at one or more, if you look at or trade more than one time frames, you still run into conflicts between them. There are more traces reversals on the shorter term time frames. That's true, Ellen. That's why, in other words, Ellen has stated that if you're looking at different time frames to discern what to do, you see a lot of conflict because one will not confirm the other. There's a lot of whipsaws and things happening. Extremely true. That's why we don't suggest that you look at more than one time frame. In other words, so many traders like to look at the higher time frame to tell them what to do in the lower time frame. That's not suggested in any of our strategies. We only trade the chart we're looking at. So therefore, you've just made your trading that much easier. So if you're trading an hourly chart and there's a lot of whipsaws, well, most likely the strategy is going to keep you out. You're not going to be in because there's no real trend established. The PET D as well as the 50-period moving average will many times keep you out of these rangy whipsaw markets. So you won't be doing anything. If you're looking, if you decide to trade up to a daily chart, well, maybe you won't have these whipsaws, but we're only looking at the daily chart. We're not looking at the weekly to tell us what to do on the daily, and vice versa. So that's why we say keep things as simple as possible. Now, if you want to use that technique, that's fine, but it's only, in my opinion, serves to keep you out of a lot of good trades, because you will see conflict where they're not in sync with each other, and so it'll keep you out of a trade, and you say, boy, I should have taken that trade, but it wasn't in sync with the higher time frame, so I missed it. That's why I don't trade that way. But that, again, that's just the way I trade. It's not suggested, but you can do it if you'd like to. It's up to you. Let me see here. A couple more. Lewis is asking, when does the course begin? As of now, we don't have the exact date, but the class number 1 is what you have instant access to. That's a video recording. So you will be getting that within the next few weeks, and we'll be deciding roughly after that, after we get enough people and decide what the best day is for everyone, probably sometime within February, okay? Let me see here. A few more questions before we exit. But remember, here's all the information you need. If you're really serious about your Forex trading, taking it to the next level, I strongly suggest you take advantage of this. If not alone for all the information, but because of the the testimonials we've had, we shared with you what the other course members have said once they took this college course, especially the gentleman who had been trading for so many years and never really seen any success and consistency, was now having tremendous trading profits, just trading strategy number 4. He wasn't even talking about strategy number 5 or strategy number 1. So also, the best thing is that we have payment plans. So we didn't have this actually with the very first course we gave out roughly a couple of years ago. So we now have payment plans. So we realize if you can't come up with the lump sum, even the discounted sum, you can still be up and running and have immediate access as long as you have the deposit of the payment plan. This is all done through Pro Trader Strategies. Once again, they're doing all the marketing and all of the selling of this, so you can contact them through the email you see right there. You can email them at trading@protraderstrategies.com and then call them directly at 310-598-6677 to speak to someone over the phone to get more information and to put together a trading type of, I should say not a trading plan, but a payment plan for you. And lastly, the link below the phone number is what you can cut and paste and put on your browser, but if you want to simply click on a link that's live, you can go to the right in the chat box and you will see that link right there posted. And you can just simply click on that link. It will take you right to the page of the Forex College, and you will be getting that discount as well. Remember, that's a 12% discount. Our Forex College members paid roughly $4,000 last time. We're giving you a discount at this phase. So a lot of great new information involved with this at a discounted price from the original price. This is only the second time we've had this college course in the Forex market, so I strongly suggest you take advantage of this. We probably won't be having it for another 2 or 3 years, and who knows, we may not even have the Pet D available by then if we have enough of these people being interested in purchasing it from us. So if I see here, let me just open up the question and answer box one last time to see if there's any more questions before we conclude here. BM is asking, please put in the link as you got in late. I believe everyone will be sent the link if you got in late. Remember, the link, if you're talking about the link to the actual sign up, is right there on your right. If you look on the chat box, okay, BM, it's right there on your chat box. If that's the link you're talking about. If you're requesting a link for the recording, simply email the people at Pro Trader Strategies or call them and they'll send you the link to the recording. Okay. In conclusion, I want to thank you all for joining us today. Remember, this is a great program. These strategies have shown tremendous amounts of consistency for all of our traders. They work extremely well, but remember, we're not looking for home runs. We're not looking for people to tell us where to buy and where to sell. We're looking for techniques and education that have stood the test of time, that show consistency. Now, someone would say, well, boy, Steve, I haven't been trading that long. How am I supposed to figure this all out? Well, you have a private mentor, someone with 38 years experience who's going to be there with you every step of the way. So you don't have to worry about figuring it out on your own. You can contact me. You'll have my private email address. You can contact me whenever you'd like. Plus, you'll be live with me every week, being able to discuss these situations and these patterns and these strategies. So if something isn't clear, I can talk with you live and explain it to you. So 38 years experience right there in your hand. So if you're really interested in taking your Forex trading to the next level in 2015, I strongly urge you to take advantage of this course, of this college course we're offering, because remember, we've only done this in our 7 years. We've only done this once before. We may not do it for a long time. All right? I want to thank you all for joining us today. Thank you for taking time out of your Friday, and I look forward to all of you becoming students of mine in the Elite Forex College course. Thank you so much. Have a great weekend. We'll see you next time. Bye-bye.